Hi guys, this is Happy Forest here again. Today 18th July 2026, I'll be doing my technical analysis as regards gold. You guys know I trade gold and also stock indices, but majorly I trade gold, which is my main focal point. Now I'm going to be doing my technical analysis as regards gold and where gold is going. Now there's something you guys need to know. It is no news that gold is in an uptrend in the long term. Yeah, on the short term period, you're having a sell-off in the precious metal. Now, let's go to the higher time frame, which is the monthly time frame. It's going to give us a clearer picture of what gold is going to do, or has been doing rather. Now, if you look at this your screen, you would notice that for the past 5 months now, if you look at this 1, 2, 3, 4, 5, gold has been in a what? Nasty downtrend. We know that gold on the long term is meant to be rallying up to the top, which everyone knows. But at this point in time, for 5 months prior, you'll notice that the market is tanking, is dumping. It is as a result of inflation and as well the geopolitical tension in Iran and USA. Everybody knows about that. So now, why do I have to do this analysis? So that people can understand exactly what gold is going to do next. Now, let's go back to the weekly time frame. Okay, let's go to the daily. So I don't think we need the weekly. You would notice that it's giving us a structure, a downtrend structure. There's something we know. There's something we technical analysts or traders usually calls lower highs and lower lows. Because at every point it gives a lower high and a lower low, lower high, lower low. That is what gold has been giving us. So it means that it's in a downtrend for 5 months now. And in the short term, normally in the long term, gold is meant to be on an uptrend. Now let's put our chart back, our tools. You will notice that we are in a nasty downtrend, and if you look at my blue bar here, you would notice that these are my major focal points. I call it my major resistance and also my major support. Wherever you see the yellow line, it tells us about the minor resistance or minor support. But when you see this blue bar here, it signifies a major resistance or a major support. That means that these points are very, very critical. That if price gets to this point, it could change the whole story of what we are seeing. Now, what do I mean? Now, look at this. The very first blue bar we are seeing that my cursor is on right now. It's the 4,200 level, which is a psychological level that every traders are eyeing. At the same time, coinciding with a resistance, you understand? So because it's a psychological level, people are paying attention to that point. And also the 4,130 level, which coincides with my diagonal resistance. So there's a possibility that if the price gets to this diagonal resistance, it start crashing back, you understand, to give us another new low. I think that's the major thing that you need to understand about the blue bar you are seeing here. And as soon as, let's assume that we have the price hit this blue bar or this diagonal resistance and the market begins to crash down, that means that we have this blue bar as a support to contend with. So it could actually still push the market up higher, you understand? And everyone knows that once we lose this blue bar, we can lose this 130, you understand? But we still have this 4,200 blue bar to contend with as a resistance, which is a major resistance. Now, a major resistance is meant to react, or not just react, to reverse market, you understand? Same thing as 4,130, that is a major focal point in this gold market. Now, if we lose this 4,200, then we are expecting the market to get back to 5,000 plus. We're expecting gold to rally up to 5,100. You understand? We have all these points to trade. You understand? But then we should understand that this zone we are in right now is a decision point, and if we lose this support zone, that gives us 3,913, then we should have we should be expecting the market to crash back to 3,400 per ounce. And we have this blue diagonal support right here, that shows the trend of the market for quite a number of weeks. Now let me show you that so that you can understand what I'm talking about. You notice that 4,300, you notice that the market has been respecting this zone. Even if it drops from this place, if you lose this last support blue bar, that means you should have this one to contend with. And if we lose this diagonal support, then we should have this 4,300 level. That was pre-war, before the war started. We had a breakout. If you look at the date, that was a massive resistance level that is going to become a support if we lose this blue bar. But if we don't lose this blue bar, then that means that we have this 4,200 and 4,130 to contend with, so that the market can rally up to the top. And we have the normal gold rush up to the upside, the gold rally that everybody knows, you understand. But in the short term, this is what we call a correction, and for investors, it's an opportunity for you to buy at a lesser price, you understand. So market is meant to trend, and once the trend up higher, then a reaction or a retracement or a price correction is what is happening right now. So you can't buy at a very expensive amount. Allowing the market to retrace back to a particular level is a very good decision for every investor, to buy at cheaper rate. So there's a possibility, and looking at what we have here, it's a possibility that this market is going to crash back to this point, and once it crashes back to this point, there's going to be a reaction from this point back to this yellow bar up here. So we are all fingers are crossed until next week. Now I'm doing my analysis based upon next week. Let's see what happens. So we have those lines to contend with. If we lose the 4,200 mark, that means that the market will keep riding up to the top. If we lose the 3,900 mark, that means the market is going to crash further down. And once the market crash further down, then it gives other investors or other traders to buy gold at a cheaper rate. So that is my analysis as far as this following week is concerned. So but in the short run, as a trader, you don't anticipate larger amounts or larger pips. Look at what is on your screen right now. Now it means that you can still find a short-term trade. Now in between my 4 hours and my 1 hour, which is my short-term trade, if we lose this resistance or this diagonal resistance, then we have more than 200 pips up to this point. I talked about the 4,130 mark, which is my resistance, my major resistance line or major reversal zone. That is this blue bar, this 4,130 and this 4,200. But it's a very long journey from where the price is currently. The price is currently at 4,018. So before we get to 4,200, there's almost like 300 or 500 pips. You understand? So for now, for next week, if we lose this resistance, this diagonal resistance, which is my trend line, then we should expect the market to rally up to something like 4,098 per se. So that is what I say about this following week. So I'm going to see you guys in another episode. Take care. Bye.